Let's discuss the other very important aspect relating to the partnership deed. It states rules in the absence of partnership deed. What it means, first of all, dear students, we understand rules in the absence of partnership deed means sometimes when there is no agreement among the partners, whether it is oral or whether it is in writing. Now, what rules will be applicable in that situation? First of all, understand when such type of the situation is there, that in numerical problem you will not find anywhere that it is written that partnership deed is absent, but it is implied when those provisions are not given that partnership deed is not there. I repeat, when certain provisions relating to the adjustment of certain items are not given in that numerical, we would assume that partnership deed is absent or there is no partnership deed. Now a very relevant question arises that when there is no partnership deed, then how the adjustment is to be done relating to some of the items. Now this very important segment states or gives you certain guidance relating to the rules which can be applied in case the partnership deed is absent or there is no provision is mentioned about certain items in particular numerical. Now what those rules are there? First rule say the partners will share the profit and losses in the equal ratio. What it means? That irrespective of the amount of capital invested by a partner, irrespective of the time devoted or efforts made by the partner, irrespective of the standing or goodwill of a partner, irrespective of a nature of partner, whether active or sleeping or dormant or nominal, the profit sharing ratio will be equal. For example, if A and B are partners, A had invested rupees 10 lakh, B had invested rupees 1 lakh. But if the partnership deed is not there, both will share equal profit, that is 50% A and 50% B. So, first rule say that there should be the sharing of profit and losses in the equal ratio. Second rule say that interest on loan will be given at the rate of 6% per annum to the partners. What it means? That if any partner has given loan to the firm, loan here means over and above to the amount or his share of capital, then the partner is entitled to get interest on that additional amount which is called as loan at a minimum rate of 6% per annum. It is a minimum rate of 6% per annum if partnership deed is missing. Other very important rules say no interest is allowed to partners on the capital invested by them. If partners make any provision, then implied that there is no partnership deed absence. Partnership deed is there, but if there is no partnership deed, then no partner is entitled for any interest on the amount of capital invested by them. The other important provisions say no partner is to get any remuneration such as salary, commission, etc. for participating in the business. Whether a partner is active, whether the partner is dormant, whether the partner is by estoppel, whether the nominal partner, no partner is entitled for any remuneration such as salary, commission, bonus for participating in the business. Likewise, no interest will be charged on the drawings made by the partners. When a partner is not entitled for interest on capital, obviously the partner is not being charged any type of the interest on the drawings made by him. So dear students, here the 5 important rules are given. Please keep in mind these rules will be applicable only when there is absence of partnership deed. And absence of partnership deed means that the provisions relating to certain items are not given in the statement or in the question. Now, You had studied here the 5 important rules, 3 on this slide and 2 on this slide. Now, in nutshell, keep in mind I give you the 3 important rules which you have to keep in mind. What those rules are there? First rule is there that profit sharing ratio among the partners will be equal. This is the first rule, that profit sharing ratio among the partners will be equal. Second important rule is there, no partner is entitled for any type of the remuneration with reference to his work or his duties with the firm, like salary, commission, bonus, perquisites or any allowance. I repeat, no partner is entitled for any type of the remuneration in any form like salary, commission, bonus, allowances, perquisites, whether he is active partner or whether he is sleeping or dormant partner. Likewise, no interest on capital is to be given to the partner and also not charged on the amount of drawings made by him. And the third and final rule is there that if any partner has given loan to the firm, interest at the minimum rate of 6% per year per annum will be given to the partners. So I hope you always keep in mind these 3 important rules which are applicable in the absence of partnership deed. First rule is profit sharing ratio will be equal. Second rule is there, no partner is entitled for any type of the remuneration of any form. And finally, interest on loan should be given to the partner at a minimum rate of 6% per annum. Dear students, I request you continue to study the theoretical aspect because it will help you, guide you to solve the numerical. I would continue in our next class tomorrow relating to the other aspects, and that may lead to the numerical aspect for solution of the numericals, like the preparation of profit and loss appropriation account, how the capital accounts of the partners are maintained, what are the different ways in which they can be maintained, how the interest on drawings and interest on capital is calculated, like so many other things we are going to discuss in that. Thank you very much for joining the class. I request you must have a book with you, you must have a register with you, and when you join your live class, reading class or the other class, you please be very attentive in that class. You get your doubts, queries to be clarified. Then only you have the mastery in the subject and you become the scholar in the subject of accountancy. Thank you very much. Have a wonderful day.